Hey, what's up? I'm going to explain everything you need to know about a hard money loan, including why you may need one, how to qualify, and how much they are going to charge you. For those of you who are new to the channel, I'm a house flipper in the San Francisco Bay Area, and I've been in business for over 3 years now. I've completed almost 20 projects so far. I've worked with 3 hard money lenders on numerous loans. Hard money loans are short-term asset-based loans that are usually used for fix and flips. The loan terms are usually less than a year. You can ask for an extension if needed, but you'll have to pay an extension fee. You probably have heard that hard money loans are a lot more expensive than a conventional mortgage. So why would you want to pay more for a short-term loan? There are a few good reasons. First of all, hard money loans are asset-based, which is very different from the income-based conventional mortgage. When you are borrowing a conventional mortgage, the lender will first ask for your employment, pay stubs, and W-2s to verify your income. Hard money lenders, on the other hand, they don't care about any of those. So if you are a full-time real estate investor like me, hard money loans are a lot easier to get than conventional mortgages. Hard money lenders pay a lot of attention to the asset. They want to make sure that the numbers are good on your deal, and after all the costs and construction, you are still going to have a good profit so you can pay them back. So as a house flipper, even if you don't have a monthly income, as long as you find a really good deal, you can still easily get a hard money loan. Another major difference between a hard money loan and a conventional mortgage is hard money loans underwriting is way simpler and faster. If you are getting a conventional mortgage, they look at your finances very closely. They ask for your tax returns, and they look at all the money in and out of your bank account for the last couple of months. And that process usually takes 30 to 45 days, and it can be very draining. On the contrary, hard money lenders have a much shorter list that they look at, which I'm going to explain in more details when I show you how to qualify for a hard money loan in just a little bit. Because hard money loan underwriting process is so simple, turnaround time is a lot faster. With all the 3 hard money lenders I've worked with, we've been able to close loans in as quickly as just 1 week. The quick turnaround time of a hard money loan gives you quite an edge when negotiating a deal with the seller. Whether the seller is in financial distress or not, quick cash is always more appealing to them compared to, say, a 30-day or longer closing. There are 2 steps in hard money underwriting. The first step is for them to qualify you as a borrower, and the second step is for them to look at specific deals. We'll talk more about how you can qualify as a borrower, but usually that can happen well in advance before you even have a deal available. It saves a lot of time if you can establish the relationship and get qualified with a lender beforehand. So when you are seeking a loan, the lender will only need to review the information on the property, which they can do very quickly. Once they evaluate the deal, they can let you know within a day or 2 whether they can fund the loan or not. So you don't have to use a loan contingency or appraisal contingency in your offer, which makes your offer hassle-free and more appealing to the seller. So many times, the quick, hassle-free hard money loans help me land deals at deep discounts off market. Because hard money lenders don't really count on your monthly income for the interest payment or the repayment of their loan. So they don't really care whether you have other debts or other loans that are outstanding. As a house flipper, most of the time, I have 3 to 6 projects going on at once. A conventional lender would totally freak out about how much debt I have, but hard money lenders are totally cool with it. Another cool thing about a hard money loan is you can also borrow a construction loan that covers 100% of the remodel cost. Construction loan usually has a draw process. When a certain amount of work is completed, you can let the lender know, and they will send out an inspector to make sure all the work is completed and they are satisfied with the quality, then they will reimburse you the funds. I don't know of a conventional lender that will lend you on construction costs like this. So how do you qualify as a borrower? Similar to a conventional lender, hard money lenders look at your credit history as well. They want to make sure that you have a good habit of paying back your debts on time. Some people ask me, what do I do if I don't have a good credit score? Well, I had the same issue when I came to the US about 10 years ago. I had no credit history at all at the time. A good credit score is so important, not just with a hard money loan. If you want to get a conventional mortgage or a car loan, or even if you just want to rent an apartment, they check your credit score first and it determines your eligibility. I think it's really worthwhile to learn about how the credit system works and start building towards a strong credit score. There may be hard money lenders who are willing to work with a lower credit score, but I'm sure you're going to have to pay a higher interest rate to make up for it. Other than a good credit score, your experience in real estate investing plays an important role as well. When I was borrowing money for my first few flips, some lenders didn't want to work with me, and the lender who agreed to lend me money charged me a much higher rate. This is understandable because there's a steep learning curve in real estate investing. As a beginner, you are more prone to making mistakes and not being able to turn a profit. As you gain more and more experience, if you show a good track record of paying money back on time, lenders will love you so much and they will cut their rates to fight for your business. Because I do a good number of flips a year, 2-3 lenders have been competing against each other and they undercut each other's rate a few times in order to become my preferred lender. Lenders also want to make sure that you have enough reserves in the bank so you can at least make the monthly interest payment for the next 3 to 6 months. Some lenders would also like to see that you have skin in the game, meaning you put your own money in the deal. So if they lend you up to 90% of the purchase price, they'd like to see that you are using your own money for the rest of the 10% of the purchase price. Some hard money lenders are also specific. They want to make sure that once they lend you money to cover the majority of the purchase price, you are not allowed to put a second lien on the house. Once you are qualified as a borrower, the lender will look at the specific deal to make sure it's a good deal to flip. How they evaluate the deal as hard money lenders is pretty much the same as how we analyze deals as house flippers. If you don't know how to do that, check out this video where I walk you through how to analyze a house flip. They want to see that at the purchase price that you are going to acquire the deal at, after all the renovation costs, financing costs, miscellaneous costs, you are still going to make a good profit. Each hard money lender has their own guidelines. The hard money lenders I've worked with, they usually use 70% of loan to value or 90% of loan to cost, whichever is lower. In the loan to value, value means the after repair value, which is the price that you will be able to sell the house for after the remodel. In the loan to cost, the cost is the cost of purchase, your purchase price. To give you an example, if you purchase a house for $1 million, then the $1 million is the cost, and 90% of loan to cost would be $900,000. If the after repair value of the house is $1.3 million, then the 1.3 is the value. So 70% of loan to value would be $910,000, which is higher than the $900,000 from the 90% of loan to cost. So the hard money lender will take the lower one, which is $900,000, as the amount that they can lend you. So how much are they going to charge you? There's interest and points. The interest is annualized, so the cost depends on how long the project is going to take. To make it simple, if the interest rate is 12%, That means for every month, you are going to pay 1% additional in interest. On a $1 million loan, that's $10,000 a month in interest. The points are loan origination fees. It's also a percentage. If it's 1 point, it means it's 1% of the total loan amount. The points are usually paid upfront. So when you close on the purchase of the deal, points are already deducted from the loan amount. Again, if you are borrowing $1 million and paying 1 point, then at the closing of the purchase, the loan funded would be $990,000 and you would have to come up with the $10,000 yourself. Points seem to be a smaller number than the interest rate, but it's an upfront cost, and when you turn projects around quickly, it becomes very expensive. So you should try to negotiate the points to be as low as possible. As I mentioned, beginners have to pay a lot higher for hard money loans. In the San Francisco Bay Area, I'm seeing 10% and 2 points. As you get more and more experience, your hard money cost drops significantly. I'm not allowed to discuss how much I pay for hard money. If you do quite a few deals a year, you should ask your lender for the option to not have to pay points. So with a hard money loan, exactly how much money do you need in the bank in order to be able to flip a house? Assuming you are a beginner buying $1 million house and you are paying 10% and 2 points. If your hard money lender funds up to 90% of the purchase price, you will need the 10% as down payment, which is $100,000. The 2 points paid upfront is $18,000. At 10% interest, your monthly payment is $7,500. For a 6 months reserve, you'll need $45,000. All other closing costs would be around $5,000. So to buy $1 million house, you'll need a total of $168,000 in the bank to close the deal. This doesn't even include the rehab cost. If you don't have this much money in the bank, but you really want to get started in house flipping, check out this video where I share with you how to flip houses without money. You can also check out this video about how I flipped my first house while working a full-time job. If you have more questions about hard money loans, comment below and I'll make sure to answer them. If you enjoy the content, hit the like button below and don't forget to subscribe. Thank you so much for watching. See you next time.